Good morning, good afternoon, good night. This is your daily horizon view. Hoping everybody's well. The date today is the 15th of the 4th. It's 2019 still. The top 5's ASX exchange traded funds. Our spotlight today is ASX BNKS, which is the BetaShares Global Banks ETF, currency hedged. And there's our beautiful logo. Quick overview of the market today. Closed out at 0.01% up. Wow. We closed at 63.47. So yeah, up marginally. So major movers were consumer staples, energy, financials, and communication services. Looking at the commodities, looks to be a little bit mixed. Gold and silver down, platinum up. WTI crude up marginally, 0.08%. If I can get the words out. The rest are mixed. So look at our top 5 percentage rises. BNKS, which is our spotlight today, and that rose by 1.54%. HJPN, we'll have a quick look at that. It's one that comes up occasionally, but not too regularly. So that's the BetaShares Wisdom Tree Japan ETF. Moving along. So let's have a look at our percentage falls for the day. We had MNRS, QR, GDX, PM Gold, and IJX. So PMNRS, which is the BetaShares Global Gold Miners ETF, that was down 1.84% on lowish volume. Major theme today was in the downside, thematic was gold. So we had our NRS and GDX, which are both gold mining company focused, and PM Gold, which is a Perth Mint Gold ETF, which is physical gold, and Cure and AJX are both healthcare focused ETFs. Top 5 dollarizers, we had IHVV, IJH, CETF, IKO, IZZ. IHVV, as most of the watchers will know, is the iShares S&P 500, and that is hedged to the Australian dollar, only up 0.5%. Or $1.82 on pretty low volume of 531. Top $5 falls, we had ETP MP, tongue twister as always, those ones, IJX, QR, ILB, and GDX. So ETPM, got it out right this time, is the ETF's physical precious metals gold basket, and that's backed by physical precious metals which are held in the HSBC Bank in the United States. Down $1.68. Which is 1.18% on extremely low volume of 87 traded, 87 shares sold and bought. Top 5 number of trades: BAS, IVV, BGS, STW, and VAP. So VAP had looks like 3 times the amount of trades today as opposed to IVV. So BAS is the Vanguard Australia Shares Index ETF, and that one tracks the S&P ASX 300, which is a little bit different to the others ETFs. They typically track the S&P ASX 200 for that class. Not sure why that one's so popular today, but people may be getting in. I'd say getting out because we had a price drop on that one. Top 5 for volume. Have a quick lickety-split look at this one. So USD, Asia, STW, ETHI, and VAE. USD is a BetaShares US dollar ETF, which I've owned for many years now. Good little earner, pays a little dividend, but not much. Volume-wise, there was 147,000 traded, just marginally above Asia. Yeah, moving on. Top 5 for value, expect to see the usual suspects here: STW, VAS, VAE, and BGS. So STW, which is the State Street Spider S&P ASX 200 fund, and that one, as most people may remember or may not remember, is designed to provide low portfolio turnover, accurate tracking of the index, and low cost. So the fewer trades, the lower the cost of that ETF is going to be, and that one's pretty much rock bottom from memory. Let's just have a quick look at another one on this list. Which one should we look at? Oh, let's have a quick squiz at VAF. VAF is the Vanguard Australia's fixed interest ETF. So that one holds securities, bonds issued by Commonwealth Government of Australia and some state government authorities and treasury corporations. That one has just below 900 million in it, so the market cap. So you get a small yield out of that one. I'm not sure. I can't remember what it is, but we'll look at that close another day. So moving right along to our spotlight, which is traded on the ASX, and it's BNKS, BetaShares Global ETF, and that one is currency hedged. So the fund aims to track the performance of the index, as usual, your performance before fees and expenses, provides tactical exposure to large global banks, excluding companies listed in Australia, which is hedged in Australian dollars, so you don't get that currency fluctuation. So provides simple, low cost, effective and transparent exposure to the largest banks in the world. Core component of global equities allocation, providing transparency and diversification benefits, if I can get my words out properly. This one's, I thought, was a little bit on the high side, but it is an international one, so you're going to get some more management fees for international ETF. But it's reasonably cost effective. The fund aims to track the performance of the index, so there's no active management fees, and that's why your fees can be kept a little bit lower. So large company exposure, so strategy invests only in the most significant global banks, so the big guys. We'll have a look at the top 10 in a minute. Look through this. So the net asset value is $6.51, trading marginally above the net asset value at $6.58, $6.58. Management costs, as mentioned before, are a little bit on the high side for me at 0.57%. Semi-annual distribution, January and July, Dividends a little low for my liking, but still not too bad at 4.88% for an international ETF. It's actually pretty good. So in my opinion, this is an ETF that is worthy of further research. I've considered purchasing this ETF as part of my passive income portfolio. However, I did decide against purchasing it for several reasons. The main reasons being for it not to pass my filter was the dividend was below 6%, so I'm looking to generate dividends above 6%. It only pays a distribution twice a year. I'm looking to build a monthly distribution profile. And as mentioned before, the management fee is a little on the high side, but having said that, it is an international focus ETF, and your management fee will always be a little bit higher for product that has international stocks in it. But good way to diversify away from the Australian banks. Also have a look at MBV, OZF, and QFN. They're also interesting alternatives. Yeah. So quick looky-see at the top 10. So JP Morgan Chase, Bank of America, Wells Fargo. I think Buffett owns those three in his portfolio for Berkshire, so that can't be going too far wrong if the ETF owns those three. HSBC, that's one of the biggest banks in the world. Typically, that one goes all right. Citigroup's another massive bank as well. And you've got Royal Bank of Canada, Toronto Dominion Bank, China Construction Bank, Banco Santander, Spanish Bank, and US Bancorp. I'm pretty sure Buffett owns US Bancorp as well. Reasonable performance since inception. It's been a bit shitty the last year or 6 months. It's been down, but since inception it's not too bad. Hasn't been running that long, so it was only created on the 28th of July 2016, so track record is not that long, but definitely worth a closer look in my opinion. So we're here to crack your financial sky, providing information, motivation, and a jumping off point, somewhere to start for your investing. ETFs are a clever little way to start that, kick it off, and then you can build on it from there. Thanks guys. If you like it, give us a thumbs up and subscribe if you like what we're doing even more. Once again, thanks. Have a good day. Ciao.